something terrifying is repeating itself. A pattern that once erased 89% of global wealth and destroyed millions of lives. The same pattern that appeared in 1929, again in 2008, and now it's flashing bright red in 2025, 18 months. That's all it took back then, from record highs to absolute collapse. And here's the part no one's talking about. The same 18-month setup that triggered the Great Depression has quietly returned. Different time, different players, but the same mathematical rhythm, the pattern that ends every empire and resets every market. Beat short pause, we're already in stage 5, and if history repeats, the next 16 to 18 months could erase trillions in global wealth. Economies don't crash randomly. They follow cycles invisible, but predictable. Think of it like a financial heartbeat: expansion, euphoria, denial, panic, collapse. Economists call it the 18-month crash pattern, a repeating cycle of credit, speculation, and liquidation that's been spotted before every major downturn in history. In 1929, it began with cheap credit and booming stocks. In 2008, it was subprime mortgages. Today, it's corporate debt, tech speculation, and government borrowing on an unprecedented scale. Every tick of the clock brings us closer to the same end. And what's shocking, we're following the timeline almost to the month. Let's go back for a moment. In 1929, the Dow Jones soared 400% in 6 years. Margin debt exploded. Investors borrowed money to chase stocks, convinced the boom would never end. Sound familiar? Then, the pattern emerged. Stage 1, the blow-off top, extreme optimism. Stage 2, the first dip, a quick sell-off everyone dismisses. Stage 3, the recovery markets bounce back. Headlines shout, the worst is over. Stage 4, distribution. Insiders quietly exit, while the crowd piles in. Stage 5, collapse. Prices implode. Credit vanishes. Fear takes over. From the peak in 1929 to the bottom in 1932, markets lost 89% of their value. Let's look at today. We've seen record leverage in hedge funds. Household debt has hit $17.6 trillion in the U.S. corporate defaults, the highest rate since 2009. Meanwhile, investors are pouring billions into speculation AI startups with no profits. Meme stocks, digital tokens backed by hope, not cash flow. The Federal Reserve tried to cool inflation, but after 2 years of hikes, credit is freezing. The bond market is screaming danger. The yield curve has been inverted longer than at any point in history. That inversion has never failed to precede a major recession. And yet, the stock market keeps rising, just like 1929, just like 2007. Here's the contradiction. The higher we go, the weaker the foundation becomes. In the months before the 1929 crash, headlines read, "The fundamentals are strong. A soft landing is coming." Sound familiar? We're hearing it again from central bankers, mainstream economists, corporate CEOs. But history tells a different story. Every time this pattern appears, stage 5 is followed by stage 6, forced liquidation, credit collapse, mass unemployment, and right now, the data shows we're already deep into stage 5. Rising tension visuals, red data flashing, stocks are diverging from fundamentals, corporate earnings are shrinking while valuations climb, liquidity is draining, money supply growth negative for the first time in decades, and the U.S. national debt, over $35 trillion, rising faster than GDP. Ad wars, supply chain fractures, AI disruption, and you have a perfect historical echo of the pre-crash environment. It's not coincidence, it's the pattern. Cue historical montage. Rome, 1929, 2008, modern markets. Every empire in history, Rome, Britain, America, has hit this phase. Too much debt, too much speculation, too much denial. Then comes the reckoning, and just like before, the signs are everywhere, but few want to believe them. If the 18-month crash pattern holds, stage 6, the capitulation phase, could unfold by March 2027. That's not a prediction, it's mathematics. History has already written this story. We're simply following the next chapter. But here's the truth most won't tell you. These cycles don't just destroy wealth, they transfer it. Those who understand the pattern survive. Those who ignore it become part of it. This isn't fear-mongering, it's awareness, because the first step to protecting your future is seeing what others refuse to see. The 18-month crash pattern is repeating. It happened in 1929. It happened in 2008. And it's happening again right now. Narrator, final line. Firm but calm. History doesn't repeat, but it always rhymes, and the clock is already ticking. Fade to black, text on screen. Stay informed, stay prepared. Subscribe for more. That same pattern repeated in 2000, in 2008, and now it's unfolding again. Visual cue, 2023 to 2025, charts rising, then flattening.